Tesla fell by over 8% on Monday, leaving investors in despair. So why did it fall and should you buy? Keep watching as we answer that question by going through recent news as well as my chart analysis and price prediction. But before we do that, subscribe to our channel Stocks 101 for regular stock market updates. First up, Tesla reported a total production of 365,000 vehicles for the third quarter, with deliveries standing at 343,000 vehicles, which consisted mainly of Model 3 and Model Y units. This report missed the target set by analysts at 364.66 thousand vehicles, and even though it grew pretty well year on year, this report did not sit well with the market. But when the stock fell to its 4-month low price of $243, Cathie Wood's ARK investment group purchased over 130,000 shares, which is their first purchase since June. Talking about financials, the company's price to earning ratio fell to 84 from the previous 106, indicating a better valuation. According to experts, poor logistics are the reason behind low deliveries, and the company will have to deliver over 450,000 vehicles in Q4 to meet its yearly target of a 50% growth. With all that in mind, let's analyze the charts. So as you guys can see right here, we're now in the 1-day chart for Tesla, and first we'll analyze the 1-day chart, then the 1-hour chart, and as always, we'll finish it off with the 5-minute chart. Right off the bat, I already told you guys in my previous analysis on 2nd October that the stock is going to fall down because, well, first of all, the AI day did not get the response that it needed, and secondly, the delivery numbers kind of lagged. And right after my analysis came out, the next day, as you guys can see, the stock fell by 8%, but right now, the stock is currently in a gap up as well as in a recovery mode. Now, pullbacks such as these, or rather pull-ups such as these, are pretty common after big crashes because they are needed to, just continue the flow of the bearish run. Now, if we look closely, we can clearly see that this is a bear trend, right? We did make a high over here, then we made a lower low, a lower high, lower low, lower low over here, and then we already made somewhat of a lower high over here. So I believe that we'll probably continue this trend on the lower side. And if we look at the candlestick patterns, we can see that today we are not getting enough volume from the buyer's side, right? The sellers are pretty much competing on the equal level. So we can see that we got a good wick from the seller's side as well, a good wick from the buyer's side as well. But currently the body indicates that, the buyers are taking in charge of the stock. In my opinion, we will end this day off in the greens, of course. As you guys can see, we're up 3.92% currently. And once we end this day in the greens, obviously we might get another green candle over here, but I do not believe that, we'll enter this range again. Sure, we might get into this range, but we probably won't be breaking this level anytime soon of like what, $265, I guess. Or even the $260 range, in my opinion, should be hard to break for the stock. And once we hit that, our next high should be somewhere around here before we fall off again. This, in my opinion, will continue for some time, right? First off, with the beaten up market conditions, and secondly, with the delivery numbers, we will probably see the stock go down until the earnings report comes out. And if the earnings report, surprises the investors on the positive side, we'll probably get back into the $250 range, right? We'll first glide back into this $220 to $30 range, in my opinion, right? But this is now, let me get this clear, right? To $40 to $50, it's a pretty good price for the Tesla stock, since I already told you guys that the stock has gone down, or rather gone up to a price of over $300. So this does indicate like a 20% upside for, well, 3 or 4 months, right? So that's a pretty good return. So in my opinion, the stock should go down over here, but that's not that big of a worrying factor, right? The stock will eventually recover. But first up, let's see. If the stock gets over here and on the earnings report we can see something positive, we'll probably get back into the $250 range. And after that is done, right, we'll probably head for these resistance levels. Once we make, if we already made a high over here, let me get all of these drawings, aside. If we already make a high over here and then we make another high over here, that would be pretty much a double top. After that, we might repeat a head and shoulders pattern, and we might, cross this top over here, and after that we might get in for a reversal. But I do not believe that the stock will hit the $300 range anytime soon. If we get the Q4 deliveries correct and we hit our growth target year on year, we might get that right. But then again, that's a bit difficult considering that 450,000 vehicles jumping from 360,000 vehicles in the previous quarter. It's like a 90,000 vehicle jump, and it's definitely, I guess, possible, but well, really difficult. With that being said, let's analyze today's movements in the 1 hour chart. As we can see that on October 3rd, we did not lose much value in the candles, but well, the gap down in itself kind of, gave away about 4% of the value. After that, of course, we got this candle over here where bulls tried to sustain it, but well, it fell down anyways. Then we can see that the range kind of squeezed into this part over here where we made a double bottom at $240.98, somewhat like $241. Of course, after that, we made somewhat of a double top over here between this level. Let me mark it between this level and this level. So that's $246.2. So we can see that we're getting resisted somewhere around 246, $247. After that, we can see that this candle over here is somewhat in a gap up. Of course, right, this is the market on the next day, that's today. We can see that we're up about 4.5% now, which is again really good, but it's pretty much, understandable. Now, I believe that we'll get to this range of about $255 before, we continue to fall. So we'll probably get another green candle over here before getting red candles, right? We might make a double top over here, continue the scenario. And after that, of course, a fall is indeed awaiting the Tesla stock. So in my opinion, today will probably end somewhere around, well, it won't be negative as I already told you guys, but it would probably be somewhere around the 250 $252 range, right? So we'll go down over here, then we might get a positive candle over here, right? Ignore the time frames. I'm just drawing this out of my own assumptions, right? I'm not even looking at that. So we'll probably get back into this range after falling down, right? Because we're, pretty in line for a pullback once we go up in two candles, right? We'll probably hit this and then go down as I already told you. But with that being said, let's analyze the 5-minute charts in more detail. As you guys can see right here, we're now in the 5-minute chart, and right off the bat, we can see a lot of pullbacks over here. First, we of course got into a gap up over here, then we got a pullback, after which we can see that the range kind of squeezed into this zone. Of course, we broke that over here. So this was a pretty good trade when we made this double top and broke it on the upside using the $251.7 range as a support. This could have been a buy level for a small intraday trade, right? So of course, this gave us a return of about 0.7%, and with a 5x margin that would have been 3.5%. So we can see that we got a pin bar candle over here on the bullish side, which indicates that the sellers did try to push the stock all the way down to the level of $249, but the buyers picked up pace and went all the way up to $250, after which, of course, we took support at $250 over here, right? And after that, of course, you guys can already see that the stock is currently bullish, but in my opinion, we'll probably, this was the top that we already made. We might go back up again to make another top around 255, but of course, we'll come down after that. We'll probably make somewhat of a head and shoulders pattern, right? So let me point that out for you real quick. So this would be shoulder one, head and shoulder, and after that, the next day we'll probably get further crash. But then again, remember that this is definitely not financial advice, and I could be wrong since this is just my own analysis. So make sure that you do your own research before you trade. If, however, you enjoyed my analysis, be sure to hit the like button. If you did not enjoy it, be sure to hit the dislike button. You can subscribe to our channel Stox 101 for more such videos. And as always, I will see you guys in the next one.